Hey traders, Akil Stokes here of TradingPower.com, and welcome to this week's live room weekend review video. I've been getting great feedback from these videos, great comments, great emails, and just want to say I really appreciate it. It's sometimes it's hard to tell whether what I'm doing is positive if you guys are actually watching it. So every time I get feedback, comments, thumbs up to that. It makes me know that hey, I'm doing the right thing, and I'm really affecting traders out there. So as you know, usually I'm a man of many words. This week, not so much. So we're going to jump straight into some of the live room recap videos from this week. And at the very end, I'm actually going to throw in a video of a live recording during one of our sessions of basically a rant I went on about taking targets off too early and discipline, stuff like that. Now that rant ended up being pretty long, so I'm gonna try and edit it down some, chop it up, and get the important parts up. But it'll be cool to see a behind closed doors look at what actually goes on in the live room instead of just having me recap it after the session's over. So check it out, and I hope you guys enjoy it. Hey traders, Akil here. We just wrapped up Tuesday's session and want to do a brief review of some of what we discussed during the day. And there was actually two pretty cool trade setups we had. We did take a few losers, but I want to show you one winner and then some analysis that we did to keep out of a loser. And actually, start on euro dollar here. Let me make sure I get my stop order off. Took about a 50 pip trade right here, but we just used a basic trend continuation trade. Structure based setup here on euro dollar, and it's really simple. If I zoom out, scrunch up my charts really low, you'll see that we basically just played a retest of this structure area right here. The market had broken above structure, we had spiked below, we had broken above our previous high, signifying a change in the most current trend. Let me zoom in a little more for you guys. Signifying a change in the most current trend. So all we did was this. We waited for the price action to come back into this level. You can see the RSI went oversold. We actually came down here. We got a double bottom with RSI divergence, and well, we bought them up. We looked at target one at a retest of our structure, so nothing too out there. Pretty conservative target ones, and a target two as a retest of our other recent structure highs. So a nice, easy 50 pip trade. No fibs, no real indicators other than the RSI. Just knowing price action. Now, speaking of price action, it also kept us out of a losing trade on pound dollar. Now, we eventually did take a cipher pattern loss on a higher time frame, but when we open up the room, here's what we were looking at. And let's delete this. We're looking at this section right here for a potential double bottom. And we have a DSR level, so a dynamic support and resistance level at that area. Market did go oversold, as you can see the RSI here underneath my 20. And a lot of the traders were looking to say, hey, if we get a double bottom here, we're going to buy these up. We are at a previous structure level. Now, here's the concern I had. So when I last did my higher time frame analysis, I noticed that, or my overall bias was that this market was going to continue trending down. And here's the issue I had with this trade. As you can see, the market has been creating lower low, lower high, lower low, a lower high that comes right into a structure level, followed by another lower low, lower high coming again right into a structure level, followed by a lower low, which was our initial test on this double bottom, followed by what? A lower high that came right into this structure level. So although we were at a structure level here, although RSI did go oversold, although we put in the double bottom here of RSI divergence, what I told the traders in the room is just seeing the overall trend, seeing the ebb and flow of this thing again, lower low, lower high, lower low, lower high, each time coming back, hitting previous resistance, turned into support. This was a trade that I felt was safer to pass on because the chances were this was going to be more of a trend continuation move where we hit this lower high once again, or this lower low once again, and continue down. And well, that's exactly what we did. So again, a good example. I've been preaching this for the last 2 weeks of how analysis can keep you out of some bad trades and not bad trades, but can keep you out of some trades that maybe aren't the best opportunities, and this is a perfect example of that. So Wednesday wasn't the hottest day in the live room. We did have a lot of action. We took about 1, 2, 3, 4, 5, 6 trades. Unfortunately, 4 of them were losers, which happens. It's part of trading. But I did want to discuss 2 are still in progress. As you can see, euro dollar is bat pattern completion about break even, and Aussie dollar actually just hit target 1, which we're waiting for a while. And I want to discuss Aussie dollar because we took a losing trade on this earlier, and I'll explain it real quick and why it's important to just keep firing. Took a shot earlier in the day on a structure-based trade, buying up the Aussie right here, saying that, hey, price action made new structure highs. If we're going to continue this trend, we should see a bounce off of this structure level. Well, unfortunately, we were stopped out, but because it's such a low risk area, we only took about a 10 pip loss. What happened was market price action pushed down to the bottom of our DSR level and gave us triple bottoms down here. So what did we do? Well, next bar market, we bought them up again. And well, after channeling for a little while, we did have a wedge in here that we talked about in the class. I don't trade wedges, but we talked about it and predicted what would most likely happen. But the point is, we got ourselves, we didn't get discouraged, we didn't whine and cry about it. Well, we just took the next opportunity. And what happened is, well, we just got a first target winner that was up here, which made up for almost all of what we lost on the first trade. And now, if we roll up to hit target 2, well, now we've completely made up for that first losing trade and some. So again, the key is you got to keep pulling the trigger. Just because you have a losing trade doesn't mean you need to turn a blind eye to the next potential opportunity, because it could be that next potential opportunity that makes up for that winning trade. Well, why didn't you let it hit target 1? Or why didn't you let it hit target, whatever target you took out early, why didn't you let it hit all the way? I'm assuming that when you did your analysis, you predicted, and you're pretty good at analysis, you predicted a profit level based on analysis. So why go against your analysis? Was it that need for a win? Was it that need to get a winning trade, or a need to stash some cash away? There's got to be something that triggered you to take it, some type of fear. Just didn't want to lose. Well, yeah, it's you got to remember it. It's all a numbers game, and I'm glad you have a thing where you have to buy your wife ice cream, maybe up it to some jewelry or something. That'll that'll increase it a little bit, but you got to see it out all the way, because it's the big picture. It's all about risk and reward. Let's go back to what you said. You said you took 74 pips, right? 74, let's say 75, because I already wrote it in wrong. Took 75 pips of profit. You should have took 200 pips. Now, what happens if you hop on a 3-trade losing streak? You hop on a 3-trade losing streak where you lose, let's say they're small. Let's say you lose 30 pips. And again, that's times 2, right? Because you're doing 2 positions. Let's just assume. Now you lost 60 pips times 3 trades, which is what? Minus 180 pips. So you take your 75 minus 180, and that's going to give you, I'm going to cheat on the calculator, that gives you negative 105 yesterday. Same scenario, right? You saw, say you saw your targets out all the way, and again, it's good analysis because the price action went to where you said it should have went. You just didn't stick in there. Let's say this. Now you got same thing, 30 pips. 30 pips times 2 positions, 3 trades in a row. Well, now you have 200 that you gained from that trade. You just took three big losses in a row, minus 180. You're still up money. Do you guys see the big difference in this? How it doesn't seem like much on top, but taking the risk reward matters, because one winner can allow you to take, three losers and not have it damage your account. You got to understand the importance of that. That's why it's important to see these trades out all the way. It's not about having a big winner. It's about our wins have to make up for our losses. They have to. Because the majority of us aren't 80% traders. Now, I know maybe some of you are, maybe some of you are 70%, but the majority of us are probably somewhere around 60% max. And that's not counting if, and we know target twos don't hit on every trade. So we have to make sure that each winner is making up for our losers. And if we're not doing that the right way, we're going to be in a situation how I was when I first started trading, where I'd have 60% winning months, but be break even or down money, and trying to figure out why. I'm sitting to myself like, yeah, 60% win percentage, sweet. How much did I make this month? Down 200 pips. Well, how am I down 200 pips if I won so much? It doesn't make any sense. It's because I was taking profits out early. I was having trades that should have won 100 pips, but taking them out for like 50. Therefore, and I was happy about it. I play my music. I do my little. I had a not a dance routine, but I had a set playlist that I would play depending on how big the winner was. Little winner, I'd play a certain song and dance around a little bit. Big winner, I'd play this other song. I'd air guitar, whatever. I'd jump around and be happy. Oh yeah, I'm not ashamed of it. I'm not ashamed. That was my reward system. But again, I was taking profits out early, and of course, I'd see the loss all the way through. You never take a stop loss off early, right? We always see that all the way through. And I'd wind up, one of my losses, like in this case, 3 losses would take away more than double a single win. So it's very important you see it through. It's very important. And just go back through the math, Lances, add it up. You left 130 pips on the table, babe. 125 pips on the table. How many losses would that have made up for? And I'm glad you're not the only one doing this. I'm glad you're honest enough to write it in, and we have that understanding. We have that understanding, but it's a great example for a lot of traders out there, because trust me, like I said, you're not the only one doing it. But I know you're working on it, and that's all you can ask for, and just keep working. And it really just it's a confidence thing. It's a thought process thing. You got to stop associating winners with being a good trade and losers with being a bad trade. You got to kind of not think about the money, but it's now I lost my train of thought. It's it deals with confidence. Have confidence. Wake up in the morning and tell yourself, hey, I am a good trader. I am good at technical analysis. I'm good at predicting where the market's going to go. Or matter of fact, do this. Keep track of how many times you break those rules. How many times you take out profits early. If you do that 10 times, say you did it 10 times in January, just make this goal. I'm going to do it not only 9 times in February. I'm going to do it 1 time less, and really stick to that. So you have a little cheat room. You can cheat a little bit, but you're gonna do it 1 less time. Then March comes, I'm gonna do it 1 less time from February. Say February you only do it 7 times. March, I'm only gonna break my rules or take profits off 6 times. And eventually it's like you're weaning yourself off that need to take profits out early. And trust me, it'll work, and you'll develop a confidence level that'll be like, whoa, this is what happens when I see it through. And once you get that, you won't have the problem with doing it anymore. Trust me. All right, I'm missing a lot of patterns here, most likely. But I thought that was important. Trades will come. I thought that was important. Changing my thinking is a work in progress. It is the one obstacle between break even and really profitable for me. That is part of the worst. My plan is really good. Yeah, that's the last straw. And I see that with a lot of traders. It's not about trading. People can read charts all the time. It's the psychology. Matt says I always have trouble waiting out on T2 to come. In the end, I have to walk away. Yeah. Well, T2 should be the easy one, guys. T2 should be, that's the freebie. That should be the one where you just sit back and I know you want to make some money, but that's the one where you sit back and be like, I can't lose. And again, it's a change in mindset. You got to change the mindset from I got to make profit, to I want to conserve losses. I want to conserve losses. But yeah, just walk away. That's the best I could tell you. Close the chart down. Because doing this, even looking at our pound dollar cipher, I'm watching this right now and it's like, 20 minus 21 minus 22. It hurts. It hurts. But we can't. I know I can't do anything. I can't exit. I can't do anything about it. So why put myself through the pain? Why not? Why don't I just do this? Look at this. Now look. Now it's gone. Now it's gone. uh, let's look at euro pound for our potential bet. You can see starting our impulse leg, because we do break structure, so giving us an impulse leg. Starting our impulse leg at actually a double bottom right here. It's looking at X to A. You can see we come into our 50% retracement, which is what I need first for my bat pattern. Bring another Fibonacci retracement and see if we get to another 50%. Obviously we do 50%, and actually we're up at a 786. So aggressive C traders, you can aggressive C this bat if you please. And I'm sure you have strict rules for that. But what we're waiting for is a push down into this 886. So X to A to B coming to our 50%, B to C coming back up to at least 50%. In this case, it's 786. And then a CD completion down here at our 886 is what we're looking for. And just for fun, we'll bring in a Fibonacci extension. Again, swing high to swing low. And back up. And what do you know? We have a 16.8 extension there as well. Giving us a really good bat pattern if we get down there. Again, not only do we have the 886, but we have a 1618 extension. We also have a previous level of structure in the case of a double bottom. And we're also going with, we're not, well, higher time frame we are. I was going to say we're also going with the overall trend. But you can see just looking left, there's a pretty good level of structure at this area. So a good pair to watch. So I hope you guys enjoyed that. Before I let you go, I want to give you one update on something new we add to the site. Now, if you go to tradingpower.com, which you're probably on right now, and we scroll down on the right-hand side, you'll see this handsome fella. And some may say he has modelish good looks. Well, if you click on a, could you say that with a straight face? All right. Anyway, if you click on one of my posts here, or any one of my posts, you'll see on the right-hand side we now have something that says sign up to receive updates from Akil and Forex ratios. If you enter your email in here, what's going to happen is every time I put a new post on this site, no, not syndicate post, but every time I put a new post like the weekend review or maybe a midweek video or one of the articles I wrote, you'll get an update to your email with that post on it. So if you like what you're seeing, if you read any of my past articles and you like what you read, you can either just keep clicking back to the site. Again, we update material a few times a week between me, Scott, George, Jason, Todd. But if you wanna find out first when I put these new posts up, again, just enter your email, subscribe, doesn't cost anything, and you'll be the first to know about it. So take care, enjoy the rest of your weekend, and live room members, I'll see you bright and early Tuesday in the live room. We're gonna put in some work this week. All right, traders, have a good one.